Assalamualaikum and hello everyone. My name is Abdul Afi Hakim. Today, me and my friends are going to present about operational segment and interim report of our chosen company, which is Seng Consolidated Berhad. So we start with company background. Seng was formed by Tan Sri Datuk Panglima Lau Gek-Poh. The group was incorporated in 1976 under the name Seng, which means unity and success. The group has grown into a well-diversified group with 6 core businesses, which is plantation, property investment and development, credit financing, automotive, trading, and building materials. The group places a strong emphasis on value creation, operational excellence, and sustainability. Okay, next we go to vision and mission of the group. The vision is creating value together to a better future. The mission is first, to provide quality product and excellent services that differentiate them from others. Second, to be employer of choice. Next, to be the preferred partner and promote win-win business relationship. And the last one is to achieve sustainable growth and returns for their shareholders over the long term. Next, we go to management approach. There are 3 factors to consider having segment reporting. The first one is nature of the business. The group is divided into 6 business divisions, including plantation, property and investment, credit financing, automotive, trading, and building materials. Each segment is independently managed by a segment manager based on the product and services it offers. Second, information presented to Board of Directors. It contains trustworthy data about the business performance overall, which Chief of Decision Making (CODM) will use when making decisions. Third, assistance of managers for activities. Segment managers interact directly with the CODM and are accountable for the performance of the many segments that fall under their control. Next, we go to type of segment. There are 6 types of segment. And the first one is plantation, where is cultivation of oil palm and processing of fresh fruit bunch. Next, property investment and development. Next, credit financing, where is provision of financial services. Next, automotive, where is trading in motor vehicles, spare parts, and servicing of motor vehicles. Next, trading and distribution of fertilizer and agrochemical, trading of general building materials and petroleum products, and manufacture and trading of tiles. And the last one is building materials, where is operation of stone, quarries, and oxbow plants, manufacture of bricks. Next, we go to CODM of Seng Consolidated Berhad. These are the Chief of Decision Making from Seng Consolidated Berhad. First one is Harold Berhad from Automotive Division. Next is Orion Sefa from Plantation Division, Von Tauvi from Trading Division, Andrew Tolling from Quarry, Export and Big Business. We also have Koso Bank from Property Investment and Development Division, Yon Tek Jang from Building Materials, and the last is Pon Cheng Ket from Credit Financing Division. Next, we go to responsibilities of CODM. First, responsible for the performance of the respective segment under their division. Second, monitors the operating result of each business division independently in order to decide on resource allocation. Next, overseeing the management of the business and affairs of the groups, including the commitment to sustainability in the best interest of the company. And the last one is responsible to evaluate the nature and financial effect of the business activities.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Wafi bin Jaidi and I am an executive accountant of Seng Consolidated Berhad. Okay, in this section we're going to discuss about the process on how to identify the reportable and non-reportable segment. By referring to the MFRS Act, an entity shall report separately and information about the operating segment that meet the 10% threshold test as well as 75% test. For 10% quantitative threshold test, it consists of 3 bases. The first one is revenue basis, the second one is profit or loss basis, and the third one is total asset basis. According to these tests, each of the segment must at least meet 10% of total amount of selected basis in order to be a reportable segment. After determining the reportable segment of 10% threshold test, the entity should ensure that the total external revenue to those reportable segment is at least 75% of entity total external revenue. If the total external revenue reported by operating segment less than 75%, they should identify the most significant or biggest amount of an external revenue as reportable segment until the 75% of the entity total revenue is attained by the segment external revenue. Okay, suddenly, the segment that does not meet the requirement of 10% threshold test as well as not included in 75% test will be combined under the all operating segment or all other segment. Now we go to the 10% threshold test for Seng Consolidated Berhad. For this company, we are applying revenue basis in order to identify the reportable segment. How do I perform this test? The formula is total revenue of each segment divided by the total revenue consolidated. Based on the company segment information found in Annual Report 2021, which is the latest annual report, the 10% threshold test found that 4 out of 6 segment of Seng Consolidated Berhad segment revenue more than 10% of total revenue which are considered as reportable segment. The reportable segment is plantation, property, automotive, and trading, while the non-reportable segment is credit financing and building materials. After finish with the 10% threshold test, now we go to the 75% test. Based on the computation that had been done, when we divide the total external revenue with the total revenue of all segments, the total external revenue of reportable segment is 88.36%, which is exceeds 75%. Therefore, in conclusion, there is no additional reportable segment is needed, or the reportable segment is remain 4. Okay, after done with the two type of tests, we now construct a new segmental report. And based on the test, the new segmental report for Seng Consolidated is as above. In this new segmental report, the other non-reportable segment are combination of credit financing as well as building material segment, as they are non-reportable segment. Okay, now we go to the advantages that we get when we produce a segmental report. Okay, the first advantages is separation of profit segment. Transparency is one of the most important benefits that we obtain when you produce the reporting segment. Seng Consolidated has reporting segment for 6 types of segment operation. The application of segment reporting will discuss which area are profitable and which area are drained. Thus, the company management can take an action and also initiative to maintain the segment profitability as well as its performance. Okay, the second advantages of having a segmental report is lowering the cost of capital. The risk of investing in the stock of a firm that reveals all information is theoretically lower than the risk for investing in the stock of a company that withhold the information. Okay, the third advantages that we will get when we produce the segmental reporting is give better understanding of the financial statement. Segment reporting enables Seng Consolidated Berhad shareholders to gain better understanding of the variance that may affect overall number in the financial statement. For example, the report showing where those the earning from or come from, and it helps the shareholder to determine whether the earnings are sustainable or instead. Okay, now we go to the disadvantages of having a segmental report. Okay, the first disadvantages is based off segmentation. Best problem which arise in the segment reporting is division of the diversified company for segment reporting purpose. Every base of segmentation may create segment differently. Identification of segment is also problematic Segmentation can be done on the basis of organizational division, industry, market, and also a product. Each base has its own limitation and own problem when we want to identify it. Okay. The second disadvantage is it involves with the inter-segment transaction. In a diversified business entity, which may have some inter-segment transaction, there are numbers of methods for inter-segment transaction. For example, cost method, cost plus method, market price method, and also negotiated method. All these methods result in a different operation result for reporting segment, and this may create problem in future. Okay. The third disadvantages and the most highlighted, which is data manipulation. The segmental reporting information can be manipulated as well as it may be reported to the view from the management want that the user to see. For example, if the data is presented to a management eye styles, segment reporting lends itself to data manipulation.
Generally, there are two methods in preparing the interim financial reporting. One is integral method and another is discrete method. You may ask, how does both of these methods apply in interim financial reporting? Firstly, integral method takes the view that interim report is part and parcel of the larger annual reporting cycle. Under this method, the function of interim report is predominantly to predict and explain the financial information for the full financial year. Whereas for discrete method, it takes view that each interim period should be treated as an accounting period distinct from the annual cycle. Under this method, interim reports are predicted and explain the financial performance and financial position separately. Seng uses the discrete method in preparing the interim report. As stated in the report prepared by Seng, the interim financial statement have been prepared in accordance with the requirements of MFRS 134, interim financial reporting, and paragraph 9.22 of main market listing requirements of Bursa Securities Malaysia Berhad, and should be read in conjunction with the group's audited financial statement for the financial year ended 31st December 2021. For the accounting policy, we have identified that Seng uses MFRS 140 investment property. Investment property is initially recorded at costs, including transaction costs. Subsequent recognition, investment property is measured at fair value, which reflects the market condition at the reporting date. Gains or losses arising from the changes in fair value of the investment property is recognized in SOPL. All other repairs, maintenance costs is also included in SOPL. Investment properties are derecognized when either they have been disposed or when there is no future economic benefit. When there is transfer to MFRS 116 PPE or MFRS 102 inventories, it is measured at fair value at the date of change in use. The second accounting policy that we have discovered is MFRS 116 PPE, property, plant and equipment. PPE is initially recorded at cost except for freehold land. It was stated that the carrying amounts of PPE items are reviewed during impairment. Seng uses straight line basis for PPE items except for freehold land. Seng also stated that residual value, useful life, and depreciation methods are reviewed at each financial year end to ensure that it is consistent with the previous estimates. An item or PPE is derecognized upon disposal or when there is no future economic benefit. The differences from proceeds of disposal is recognized in profit or loss. When there is revaluation surplus, it is transferred to retained profits.
MFRS 134 permits a reporting entity to choose either a complete set of financial statements that are prepared in accordance with MFRS 101 presentation of financial statements, or a set of condensed financial statements. As for Seng Consolidated Berhad, the company chose a set of condensed financial statements which include all of these components. First, a condensed statement of financial position. Second, a condensed statement of comprehensive income, presented as a condensed per income statement, and a condensed statement of comprehensive income. Third, a condensed statement of changes in equity. Fourth, a condensed statement of cash flows, and the selected explanatory notes. Current and comparative of each statement prepared by Seng Consolidated Berhad. First, for statement of financial position, as of the end current interim period, that is 30th June of 2022, the comparative statement of financial position as of the end of the immediately preceding year, that is 31st December 2021. For statement of profit or loss and other comprehensive income for the current interim period, that is 30th June 2022, with comparative statement or profit or loss and other comprehensive income for the comparable interim periods, that is also 30th June 2021. Next, statement of changes in equity. Cumulatively for the current financial year to date, that is 30th June 2022, with comparative statement for the comparable year to date of immediately preceding financial year, that is 30th June 2021. And as for statement of cash flow, is the same. The current period and comparative period is the same as the statement of changes in equity. Just the statement, the type of statement itself is different. Yes.
Now I'm going to explain the adjustment we have made. The first adjustment will be under MFRS 138 intangible asset. The company incurred development costs for product HS of 250,000 ringgit during the year. The development costs fulfill requirement to be capitalized as intangible asset and is expected to be in the market for 3 years. Total revenue expected from the product was 150,000 ringgit. The computation would be the development costs for the product HS is recognized as an intangible asset at 150,000 ringgit. This is because the standard allows development costs to be capitalized as an intangible asset, but it's restricted to maximum future economic benefit. That balance 100,000 from the initial cost of 250,000 ringgit is expensed off to statement of profit or loss under admin. The journal entry for the intangible asset would be like this. The journal entry for the amortization would be like this.
As for adjustment number 2, investment property to property, plant and equipment. The situation is, the company decided to occupy a building that was previously classified as an investment property at a carrying value of Rm 150 million. The fair value of the building at the date of change in use was Rm 295 million. The building has a remaining useful life of 25 years. As for the computation, first we have to debit the PPE account for building at the change in use value, that is 295 million, and credit investment property at the carrying value, that is 150 million, and also credit SOPL for the remaining value, that is fair value gain on reclassification from IP to PPE, that is 145 million. As you can see, this is the statement of financial position as at 31st December 2021 of Seng Consolidated Berhad. And this is the before and after adjustment. And for the adjustment number 1, you can see that the intangible asset value have increased from 37936 to 38086. And the bank balance have decreased in value from 1225957 to 1225707. And from the adjustment number 2, we can see that property, plant and equipment have increased in value from 4050333 to 345333, and the investment property also have decreased in value from 2171 695 to 2021 695. That's all from us. Thank you for listening.